This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. In fact, we are seeing some very good gains in spite of news that durable goods actually showed a decline instead of the expected increase. Also, we did have the consumer confidence report coming in better than expected. Also, the Richmond Fed manufacturing index coming in stronger. But for the most part, I think we have to focus on these durable goods numbers, which were surprisingly weak, and yet futures held up extremely well. So that has to be viewed as a sign of strength, at least short-term strength in the stock index futures. Longer term, we continue to believe that the historically low global interest rate environment will continue to support equities on a global basis. So the long-term trend for stock index futures still appears to be higher in spite of all of these geopolitical problems that we have ongoing. Over in the currencies, seeing the euro currency trading higher this morning. This due to ideas that when the European Central Bank meets on November 6th, they will not change policies. Most likely they will keep policies where they are as far as the interest rate outlook is concerned. However, we feel ultimately that the ECB will be adding more stimulus down the road. Seeing the yen trading a little bit lower, even though retail sales in Japan came in stronger than expected, and the Australian dollar higher on news that profits at Chinese industrial companies came in better than expected. Of course, Australia and China are trading partners. A good portion of what Australia exports as far as raw materials goes to China. And interest rate markets a bit lower, especially at the long end. We do have a lot of supply this week, 108 billion in total offerings. Continue to feel that with the blow off to the upside that took place several weeks ago, that we need to shake out some of the longs that I think are remaining in this market that bought on that breakout. So we're looking at the 140 area in the December bond futures as an area of support and a possible buying area. Either way, the long-term trend still appears to be higher in treasuries, especially for the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.